welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get your answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that will be flashing on the top of your screen. And each time you write to us, do remember to mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. Well, today we will be taking most of your short to medium term queries, because today is the techie special episode of Buy Now Sell Now. So we have Kunal Bothra as well as Rupak Dey, who will be taking all of your queries and they will be analyzing them on the charts. Very good morning to you, Kunal, once again. Good morning to you as well, Rupak. Thank you so much for joining us on ET Now. And let's continue taking all of the stock-related queries then. And the first query that I have is coming in from Komal, who's writing to us from New York and wants to know about Eternal, that is while known as Zomato, 1,000 shares at a price of around 242 rupees for the long term. Should add some more at current market price. Kunal, what's your take on this one? We have a viewer writing to us all the way from New York for Zomato.
Well, yeah, good morning, Cheryl. On Zomato, I would believe that it's a good zone where you can to start accumulating. As I was pointing out earlier, the stock generally forms double bottoms, and that becomes a good support zone for the stock. For Zomato, that level is around the 200-205 range, where over the last 2 months, the stock has taken support twice. Yes, there have been intraday breaks sub the 200 mark. I'm not sure whether the stock would probably fall back sub the 200 levels. But I think now at current levels, you can look to start accumulating just in case over the next 1 month or so, in case if the stock happens to go into maybe one more round of a last leg of a correction of a retest of the 200 levels, that could be a point where you may look to average further. But yeah, I think at current levels, you can look at a good starting point for Zomato.
That's the take coming in on Zomato, and let's also welcome aboard Rupak Dey, Senior Technical Analyst, LKP Securities. Rupak, hi, thanks so much for joining us. Next query coming in from our viewer, Mr. Venkat, who's writing to us from Chennai. He's asking, will Tata Steel and SAIL have a positive rally after Trump has held back his tariffs for the next 90 days? He's bought 100 shares of both of them, for Tata Steel at 140 rupees and for SAIL at 113 rupees per share. While this is largely a fundamental query on the charts on the back of this tariff pause for the next 90 days, what are you spotting for both of these companies?
So we need to be watchful for next few days. I think a lot of data to be settled within next few days. If not 90 days, we need to be focused on the technical charts for at least 9 days. So from here, I think 125 is a support for Tata Steel. And he should hold the stock with a stop loss of 125. Below 125, the stock might move into the declines. And above 136, the stock might start to recovery. So hold it with the stop loss of 125. And other stock is Hindalco, I think.
Right. Let me talk about the other stock was SAIL. Did you speak about SAIL by any chance, Rupak?
So chart of SAIL is looking a bit better than that of Tata Steel. I think above 110, the stock might move into the strength, and on the higher end, the stock might move towards 115. And above 115, the stock might move towards 120. So it's a good. It would be a good peak with a stop loss of 105 from the current level.
Next query that I have is coming in from a viewer, Mohit from Ludhiana, wants to know about Star Health. About 200 shares of Star Health, Kunal, at a price of 590 rupees per share. He's saying that he wants to hold on to this one for the next 3 years. How is this one looking on the charts, at least for the medium term?
See, the stock has gone into a very sharp correction. I've not seen, I think, the stock in a long time, but just looking at the charts, browsing through the recent charts from 650, 70 levels towards 325, 330, which was the recent low for Star Health. Now, the tough part is that, yes, the stock has gone through a very sharp correction, and that's impacted the near-term prospects for the stock. But then just basis on this last 3-6 months of correction for Star Health of more than 50%, it looks like the stock has entered into a deep oversold territory on the charts, which means that potentially from here on to the next, say, 3 months to 6 months, you can expect at least a 20% recovery for the stock on the short-term basis. So which means that maybe 400 to 450 could be a decent range where you may expect Star Health to come by. I'm not sure whether the stock would come back to your cost price anytime soon because of the way the stock price has gone into a sharp correction. So the strategy which you can adopt could be that you can average at current levels, and so that your cost price reduces drastically, and once it comes closer to that 400 to 450 range, that could be a time where you can trim your position significantly.
Okay, so that's the take on Star Health. Looking optimistic on the charts right now to Kunal. Rupak, let's come to you with our next query. Our viewer, Mr. Ahuja, is writing to us, and he holds Bharat Forge 100 shares at a buy price of 1,380 rupees per share, and Muthoot Finance, he holds 75 shares at 2,320. Now, Muthoot Finance especially has taken quite a tumble recently on the back of that RBI gold financing norms coming in. He's asking if he should be booking loss and sell both, or he should continue and hope. He should continue to hold and hope for a recovery. What's your take on both Bharat Forge as well as Muthoot Finance?
Both the Bharat Forge and Muthoot Finance has given a breakdown from their recent consolidation. For Muthoot Finance, I would like to say that it's a level where he should consider exiting from his position, or at least he should reduce his exposure in the stock significantly. We have a resistance at around 2100 till the time it is remaining below 2100. I think selling pressure might be there. On the downside, the stock might move towards 1880 and lower in the short term. And for Bharat Forge, the stock has been consolidating after a breakdown from its previous consolidation or previous swing low. Also, the stock is sustaining below the important moving average. So, sentiment looks weak for the stock. A downside towards 880 looks possible from here. Only a decisive move beyond 1020 might take the stock higher. So, hold the stock with a stop loss of 960. Below 960, exit or reduce position.
All right, let me take this next query then. This one is from Padma Sirva Rao writing to us from Bangalore. Kunal, is it better to buy HDFC and HDFC AMC at this point in time?
Better to buy HDFC AMC with respect to?
No, better to buy HDFC Bank as well as HDFC AMC.
Yeah, okay. So, yeah, I would believe yes, both of these stocks are good buys at current levels. HDFC Bank, there are multiple reasons for that. The stock had been an underperformer in the last 2-3 years. We're looking at a restart of a cycle for banks as well as NBFCs. So I think in that cycle, maybe there could be a very strong case which could be built that stocks like HDFC Bank could probably start to get back into its zone of outperformance and at least cover up that time-wise underperformance the stock has shown in the last 3.5 odd years. HDFC AMC also, on the other hand, the stock has shown a decent correction from 4,800 levels plus towards 3,800, 3,900 mark where the stock is trading right now. We all know the quality of stock HDFC AMC is, and the recent chart patterns which indicates that the stock would probably have formed a decent bottom at this 37, 3,800 mark. So both of these stocks are good buys if you're a long-term investor.
But if you have to choose between either of them, then would it be bank?
Tough one, very tough one. If your time frame is long-term, then of course go with HDFC Bank.
Okay, so that's the take between HDFC and HDFC Bank. If you have a longer time frame, prefer the bank over the AMC. But let's move on, and Rupa, coming to you, a next query coming in from our viewer, Mr. Gopinath, who's writing to us from Hyderabad. Stock in question is CG Power. He holds 100 shares of this company at a price level of 670 rupees per share. He's a long-term investor, so he's asking if he should continue to hold. What's your take when it comes to CG Power on the charts?
So CG Power has a very good support at around 525. So he can definitely hold the stock at the current level with a stop loss of 524. If the stock falls below 524, then there might be increase in the weakness in the stock. Or if the stock does not fall below 525 and remains around the current level, I think buying might come, and which might take the stock towards 610 in the short term.
Kunal, let me come to you. This next query is specifically for you, coming in from Bhagwan from Mumbai. He wants to know about BSE. He bought 20 shares of BSE at a price of 4,310 rupees per share since the bonus shares was announced 2:1 ratio. So now he wants to know whether he should sell BSE at current price or wait for the bonus share and then go ahead and exit from this counter. And also he wants to know whether he should buy KEC International at current price.
See, I'll take the second part first. Yes, KEC is a good buy at current levels. And I think the stock has gone through a decent 25% plus correction on the last 7-8 months. We know the quality of the stock on the mid-cap front. So I would believe, yes, that KEC is a good buy. But, sacrificing BSE, for KEC would be a difficult choice, frankly, because BSE is going through a phenomenal uptrend on the longer term charts. In the recent time frame also, I think just around that 4,300 400 levels, recommended buy with a near term target of 5,000 for BSE. The stock has crossed those levels. I would believe that you can hold on to the stock, maybe keep a trailing stop loss mechanism over here for BSE. Yes, bonus shares, once that happens, you might probably expect the stock to go into a supply or excessive supply, and that's where we generally expect stocks to go into a short term correction. But I think BSE as a pedigree is a fantastic stock to own from a long term play.
Okay, so BSE looking very good on the charts to Kunal. Rupak, let's come to you. Our next query is from our viewer, Mr. Tushar, who's writing to us from Delhi. He's asking if he can add Blue Star at current levels. He's considering to play the entire summer theme on the back of a forecast of a harsh summer. So, would you prefer Blue Star over a Voltas, and how do you think he should be playing this theme?
Yeah, I would prefer a Blue Star over Voltas because I think the chart of Blue Star looks more positive as it is sustaining above its critical moving average, whereas Voltas has given a breakdown from its recent consolidation. So overall, I think in the short term, Blue Star might remain strong, and on the higher end, it might move towards 2,200 in the short term. And one should keep a stop loss at 1,900, below 1,900. I think it's an exit from Blue Star.
This next one is coming in from Bimal, who's writing to us from Mumbai. Kunal, he's mentioned that he's a huge fan of yours. About 1,000 shares of Tata Tech, 700 is a buy price. Can you add some more at the levels? And he wants to know when will it cross 1,000 rupees per share mark?
Thank you so much for that. First of all, see, on Tata Tech, I think it's a very interesting juncture. For the first time in the history of the stock, I think 1.5 year of history, if I'm not wrong, for Tata Tech, the stock is showing signs of a bullish RSI divergence, which means that, and that too on the weekly charts. So the last weekly low for the stock was around 630, 35 thereabouts. This week low, for Tata Tech is around 620, and the RSI has been on the higher side. This is a very strong confirmation that the stock could probably have formed a major bottom for itself, at least on the weekly time frame charts. And generally, when you expect such kind of a formations, we expect the stock to come back to midpoint of those patterns, which I believe should be around the 750 to 800 mark for Tata Tech. So if you've bought at higher levels, I would suggest that this could be one of the better times where you can look to average, try and reduce your cost price to say closer to 800, 850 mark, and there could be a higher chance that you may come closer to your cost price or at least to the break-even point, for Tata Tech, say in the next 6 to 8 months.
On Tata Tech when it comes to the charts. Kunal, next query also coming for you. Another fan of yours is writing to us. Unfortunately, we don't have their name at the moment, but he says that he's planning to sell Reliance and instead buy Oracle Financial, OFSS, pardon me, at the current market price. And he's asking which banking or financial stock except HDFC and Kotak is good to purchase right now for 1 to 2 years. So, two queries. A, if he should just jump out of Reliance and go into OFSS, and second, from the banking space other than HDFC and Kotak, what's looking good at the moment?
So, my sense is that, of course, don't switch from Reliance to OFSS. There are multiple reasons. Reliance, of course, has gone through already a sharp correction, and we know the pedigree of the stock, and it makes a dramatic comeback in best as well as in the worst of the market times. So I think something I explained on the Chartbusters on the Pathshala today also, that if Reliance is forming a double bottom and the stock is due for a breakout, you may probably be expecting that the stock may move back to that 1300 plus levels pretty quickly. So I would suggest that hold on to Reliance Industries. And also for OFSS, the pain in the IT stocks, they could probably extend for another couple of quarters before you see a major bottom happening for these IT stocks. So I think in that sense also, maybe the timing could not be right. On the private sector banking names, I think other than Kotak and HDFC Bank, if you're looking out for, I would suggest few mid-cap, end of the banking names. You can look at AU Small Finance Bank. That's a very interesting chart, trading close to that 540, 550 mark, nearing a double bottom formation. Federal Bank has been one of the more consistent low beta stocks in the private sector banking names. I think closer to that 190 levels thereabout where it's trading right now. It's a very good buy from long-term play.
Alright, flash on the bottom of the screen, you have the SIP inflow for the month of March, and that number is coming at around 25,926 crore rupees. This against 25,999 crore rupees. And if you look at the FI inflow, it has been on a steady decline of late after hitting those record levels and surpassing the 26,000 crore mark. Now it is at a 4-month low. So that is your SIP number, a crucial one at that, actually talking about the investor sentiment as well. And let's not forget, there are some key highlights as well coming in from the AMFI data for the month of March. One is the small cap schemes flows. That one I've seen a substantial improvement for the month of February. You have the small cap fund inflow higher by about 10% on a month-on-month basis. The mid cap fund inflow was higher by about 1%. And key to note is that all the equity schemes in the month gone by showed inflow for a 6th consecutive month. But the SIP inflow number, that one is at a 4-month low, coming in at around 25,926 crore rupees. This after surpassing that 26,000 crore rupees mark when you talk about the SIP inflow that we've seen earlier on. So yes, that's a crucial number. We'll try and gauge how should one actually read into the AMFI data with an expert. But before that, let's actually slip into a break on this edition of Buy Now, Sell Now. When we come back from the break, we will connect with the experts as well as continue taking your queries. So don't go anywhere. But as of markets, if you look at it, yes, if you look at the Nifty, we've seen that steady rise in the Nifty levels from where we began actually from the start of the show. Now we are up by about 2% or so, now nudging towards that 22,900 mark when you talk about the Nifty. But let's continue taking your queries. We have Kunal as well as Rupak very patiently waiting by to actually answer those queries. Thank you so much, Kunal, as well as Rupak, for waiting by patiently. Let me take this next query that I have, and this one is coming in from Satyaveni, who's writing to us from Hyderabad, wants to know about CESC. Kunal, he's purchased this one, 800 shares at a price of 192 rupees per share. He wants to know whether he can hold, exit or average, and if average, at what price?
I've tracked the stock. I think it's a good stock to hold on to, and I think at current levels of 150 approximately, CSC could be considered as a good candidate of average. But my only concern is that maybe that last leg of correction is still pending for CESC, because the volumes in this up move, the stock had seen from 120 to 155 or 160, which was the last week or the week prior to that high for CSE. That rise has been on the back of a bit of a lower volumes. So the only concern is that maybe there could be a retest of that 125 to 130 zone for CSE before the stock establishes a major bottom for itself. But I would suggest that you can start at current levels just in case if in the next say 1 to 3 months the stock provides another round of correction and comes back to that 120, 125 kind of a zone. That's a very good territory where you can look to average further.
So that's the levels that you should be spotting out for when it comes to CESC. Let's move on to our next query, and our next query is coming in from our viewer Radhakrishna, who's writing to us from Bangalore, Rupak, and they have 20 shares of Polycab at a buy price of 5,600 rupees per share. They're saying, can they hold, average or book loss? It's a 1-year investment that they wish to hold this stock for. So he's asking, what is your target on the charts for the next 1 year when it comes to Polycab? Buy price 5,600, stock at 5,160 thereabouts right now after the kind of recent fall, 31% it's seen over the last 6 months. So Rupak, now what is your take when it comes to Polycab?
So Polycab and other wire making companies witnessed significant drop from their recent highs. And for Polycab, I would say that the stock is finally looking to getting out of the bearish zone. And the stock has made a double bottom around 4,600, and the RSI is showing a positive divergence. So I think in the short term, 50 to 50 would be next resistance above which the stock might move into the strength, and momentum might come back into the stock, which might take the stock towards 57.50 and higher. So one should hold the stock with a stop loss of 4,900 from the current level.
Right. So that's the take coming in on Polycab. Let me take this next query. It's coming in from Professor Thomas George from Kochi. Kunal, 2,500 shares of Devyani International, which is purchased at levels of 140 rupees per share. He wants to know what should he do?
If you've purchased at 140, I think it's the recent low for the stock. And I think if I'm not wrong, it's also a major support for the stock over the last 2 years from 2023-24. And I think it's a good level where you can look to hold on. So even if the stock consolidates into a big broad range where it's been trading for the last 2 years, you can look at say 190 to 195 as a potential near-term target for Devyani International. The only catch is that the stock is very high beta, and we've seen swings of 20-25% also in just a matter of few days, a couple of weeks happening for the stock. So that's the only concern with a stock like Devyani International. But I think at 140 levels, the stock is at a very strong support, and since you purchased at those levels, I would suggest a hold.
Suggesting a hold is Kunal on Devyani International. Rupak, let's come to you. Next query coming in from Mr. Pankaj Kumar Nanda, who's writing to us from Assam, and he's a long-term investor. He holds 12 stocks of Asian Paints at a price of 2,412 rupees per share, which he bought 4 years ago. His time horizon is 10 years. Should he still continue to hold Asian Paints, or do you believe any other player from the paint segment would be a better pick at the moment?
So Asian Paint has witnessed a significant correction from its recent peak, and currently the stock has been finding support around its 100 monthly EMA. So it's a long-term support zone where the stock is trading currently, and one should hold the stock with a stop loss of 2,100. Till the time it is holding above 2,100, the stock should not have any problem for the long to medium term. And on the higher end, the stock might move towards 2,800 in the medium term. So it's a hold at the current level.
All right, so that's the take coming in on Asian Paints. Let me take this next query then, and this one is coming in from Swati. Kunal, she wants to know whether she should go ahead and buy NBCC or Sudarshan Chemicals for a period of about 2 years, or if not 2 years, then what sort of a time frame should she look at, and also what entry levels?
Yeah, I think both these stocks are good buys. NBCC, I believe that the stock is ripe for a strong up move. We've seen the long-term charts. We've seen the performance for NBCC in 2021, 22. I think post those years where the stock moved from I think 15-20 rupees or towards as much as 100 plus. So I think it's a decent phase where you can look to buy NBCC at current levels, provided your time horizon is at least 1 to 2 years or more. And same is the case with Sudarshan Chemicals. The only good part about Sudarshan Chemical on this stock is that it's holding on to that 200-day moving average. So when stocks in the toughest phase of the market volatility, when they adhere to their long-term moving averages and they sustain those levels, they are good quality stocks. And whenever the markets get back into recovery phase, when the sentiment starts to become bullish, these are the kind of stocks which typically come back to their lifetime highs pretty much on the quicker side. So both the stocks are a buy from my side.
On NBCC and Sudarshan Chemicals. Rupak, coming to you with our next query coming in from our viewer who's writing to us from Chennai, Mr. Krishna, and he's asking if it's good to hold Utkarsh Small Finance Bank, Bajaj Finance and Bajaj Auto. Now, Kunal explained Bajaj Auto on the charts today in the Pathshala segment, but what is your view when it comes to all these three, Utkarsh, Bajaj Finance and Bajaj Auto?
So the stock Bajaj Finance is looking very strong, and on the higher end, the stock might move towards 9,600, 9,800 in the short to medium term. I think the stock has given a multi-years breakout, and the strength is there, and strength might be there till the time it is remaining above 8,500 on a decisive basis. And then Bajaj Auto, it is lacking a bit momentum. And the momentum might return in the stock once the stock moves beyond 7,900. So currently the stock is witnessing a bit volatility, but above 7,900 the stock might move into strength, and in that case the stock might move towards 8,800 in the short term. Then on the lower end, the support is there at 7,700. If someone holding the stock, he can hold the stock with the closing stop loss of 7,700. And for Utkarsh, I think the stock is lacking momentum and might remain in the bearish zone till the time it is sustaining below 2,500. Any rally towards 2,500 might attract selling pressure, and if the stock moves beyond 25, in that case the stock might move towards 28 or 30 in the short term. So need to be watchful if the stock moves beyond 25 in the short term or not.
Right. Let me come to you, Kunal, next. Ramesh from Bangalore is asking about Infosys. He has about 100 shares of Infosys at a price of 1,430 rupees per share. He wants to know what to do, hold or sell. Let's not forget that we are now actually already kickstarted the Q4 earnings season. So the stock performance, I think, would be impacted even with because of that as well.
Yeah, that's for sure, Cheryl. And you also have to look at. So my understanding is that you purchased it on a very recent time frame for Infosys. That's why your cost price is closer to the current market price for the stock. See, what's happened is over the last 3 months or so, the impact of the downtrend for stock like Infosys has been very severe. Now we go back to history, that what has happened for stocks when they've gone through such a sharp phase of a sudden correction, where stocks I think have corrected more than 20%, 30% in many cases. And I think for Infosys, I would believe that the stock looks to be at a similar zone on a historical context. I would expect the stock may to get back into a process of a short-term bounce, but eventually bottoms for these stocks, they generally happen after 2-3 quarters, and so maybe another 3-6 months of consolidation is what I would expect for Infosys. So it depends on a time frame. If it's a trading bet which you're looking out for, then maybe I think closer to 1550, 1600 marks where you can look to book profits. But if it's a long-term play, then let the stock spend some time over here, try to consolidate. That's where I would believe better price-wise opportunities could emerge for Infosys.
Okay, so that's a take on Infosys. Kunal, next query is also coming for you from our viewer Anu, who's writing to us from Gurgaon. She's asking if now's the right time to buy Tejas Networks.
So again, a stock which I think has gone through a sharp correction, but something which I would not recommend at current levels of 830 because of the extreme high beta nature for Tejas Network. I would suggest that you can avoid the stock in case if the stock happens to retest the previous lows, which is around the 700, 725 mark. That could be a better price point for you to buy.
All right, so that's the take coming in on Tejas Networks. On that note, thank you so much, Kunal, as well as Rupa, for joining us on the show, taking all of our viewer queries as well as patiently waiting by while we were addressing the breaking news on Amphi Data. Thank you so much for being part of the show. But in a strategic move aligned with its ambitious version 4.0 growth roadmap, Federal Bank has now appointed Virat Diwanji as the new head of consumer banking. The appointment of Diwanji, a seasoned banking professional, is seen as a pivotal step in strengthening Federal Bank's consumer banking vertical as it gears up for rapid scale and innovation. With Diwanji on board and version 4.0 in motion, industry watchers anticipate a dynamic phase of transformation at Federal Bank, particularly in the customer-centric offerings as well as digital expansion. So watch out for Federal Bank very closely.
Well, on that note, we'll wrap it up on this edition of Buy Now, Sell Now. And viewers, we'll see you on Tuesday. So happy long weekend to you. But keep the queries pouring in over the course of the weekend. And we'll try and address all of that on Tuesday when we see you at 11 a.m. But on that note, it's a goodbye from Cheryl, me and the team that put the show together. But stay tuned to ET Now because Markets at Noon is up next.
If you like this video, then like, share and subscribe to ET Now.